All right, well, in this video I'm actually really excited about it because I've been noticing a very particular position trading, counter trend trading reversal that happens. You can count on it happening once a month or thereabouts, and I think it's gonna be really easy to back test. We only have to do 2 years of it. It's one setup a month. I'm gonna try doing both counter trend and with the trend and see how that works out. So these are just through observations. I did a rough draft of it already, but I need to narrow down where I'm going to place my stops, when I'm going to move my stops. So where am I going to place my stop, when and where am I going to move my stop, and where to take profit. So basically, let me just go over the rough draft of the system here with you, and then we're going to build this system together. Okay, so these are the monthly pivots. And so you have the again the M2 and the M3. If the central pivot is higher this month, then the counter trend or the probable reversal is at the M3. If the pivot on the previous month was higher than this pivot, then I'm looking for the reversal here at the M2 for the counter trend. Okay, so what I just did real quick was I figured that I entered at 90%. Let's show you what I'm looking at here. So, all right, I changed my fib to where 90%. So once price reaches 90% of the way to my M3 monthly, then that will trigger my entry. So I'll go ahead and keep this going here, but so my entry would be right about in here. I'm looking at possibly placing stops right directly above here, and then once we break through either the monthly or a weekly central pivot, start bringing my stop down. Then for targets, I'm looking at taking profit down at a weekly target or the monthly target. And then if I do take profit at the monthly target, is it going to be at the conservative level or is it going to be at the aggressive level? So these are things that I need to answer, and come along with me. We're going to go 2 years back. Okay, so here we go, October 1st, and this is the counter trend. This is the reversal that I'm looking for. It looks to me like it's immediate stop out. So let's go ahead and see where we took it. All right, so I'm looking at the 90% level. We did reach it right in here, and I did end up getting, let's see here. Yeah, I did end up getting my stop out right here. So let's go ahead and take our stop. All right, so from here all the way down to stop is minus 70 pips. All right, so this month is cooked. All right, here is a counter trend trade, and it looks like we got it. If this is the open, let's see what day this is here, what day and time. This is the 31st, so in fact, I still have an entry. Let me get my fib level out here. And it looks like I do still have an entry, and it's right in here. And that is the first, correct. Okay, so I enter here, and we pull above the monthly central pivot, and I most likely jam my stop right below here. I do want to point out that we did reach a conservative weekly take profit zone, so let me go ahead and mark that out. That might be a reason for me to move my stop to break even. So we got in right here. My stop out would have been 17 pips. If I was to take this, which I probably won't, but you know I need to do the stats on it, it would be good for 182 pips. Okay, so another thing I want to take a look at is trading with the trend. So the first time that we reach the monthly M3, then take that trade as well. So it's kind of, you know, at times I might be hedged. So I can do that with the broker that I'm using. Most brokers you can't do that, but with the broker I'm using I can, and that's with Trader's Way. I have the link below. You can open up a demo account and play around with that. But so let's go ahead and draw out our fibs this one here. All right, so I got it in at the 90% level here. Let's see, I never got stopped out because I got my stop up here. Price comes below the monthly central pivot, and we go all the way down to the weekly conservative zone, which is good for 224 pips. If I would have held on to it and looked for other targets, I want to see what we got. So I want to mark my entry here and my stop. So I got my entry here and I jammed my stop right here. Let's see if I would have held on what we have. Okay, I do have a aggressive target reached. Unfortunately, this is going to be less pips if I would have held on for longer, but this would have been good for 188 pips. And if I would have held on and never hit my stop yet, I may have put my stop at break even at this point, and I probably would have gotten stopped out at break even. This is holding on just for way too long, and I eventually would have been stopped out. So a couple of things that I need to keep in mind when doing my stats. Let's get rid of these lines here. Okay, so this month is cooked. I have my two options. Once we come back down, I'm not re-entering a second time here at the M2. If it comes back up, I'm not re-entering again. So I only have one shot. The first shot here and the first shot here. That's it. Usually, you know, it happens in the beginning of the month, and that's it. So, all right, next month. This is going to be a counter trend trade, and I do have my entry right up in here. Let's go ahead and mark that out. All right, so I got my entry, and I got my stop way up here. Once we reach the central pivot, I probably jammed my stop, and it looks like I got stopped out on this one. So let's go ahead and mark that out and jam my stop. So this one's going to be minus 18 pips on that one. And I'm looking for my first entry down here on the M2, which we did get. Let me get my fib level here. Told you this one's going to be fun. All right, got my 90%. And if I was to go for a weekly conservative, I did get it. So let's go ahead and mark that out. So with spread, there we go. So this one would have been good for 180 pips on this one. If I would have held on, again, I want to go ahead and mark my stop. My stop would have been here. My entry would have been here. Now let's go ahead and move along and see if there's any other take profits. I'm looking for maybe a monthly take profit or a weekly aggressive. And nothing yet, nothing yet, nothing yet. I got a weekly aggressive, and that's actually going to be less pips doing it that way. Alright, so we'll go ahead and mark that out here. If I was to go weekly aggressive, that would have been good for 221 pips. And if I would still hold on for the monthly, I would have gotten stopped out for minus 11 pips. Okay, let's get rid of these here. Let's go back. Very interesting. So that one would have been minus 11 pips if I would have held on. Okay, we got a new month here. All right, so right away we come up to a counter trend trade, which is the ones I've noticed that do very well. Let's go ahead and take our fib levels here, and we're taking it at the 90% level. I do have my stop way up here. Once we reach below central pivot, I'm going to cinch my stop up to right up there. But what I do notice right away is that we reached a conservative weekly target. So then let's go ahead and take those numbers here. So this one's going to be good for 137 pips. If I was waiting for the for a monthly target or a weekly aggressive target, I would have never reached it, and I would have ended up getting stopped out either at break even or for 34 pips. So we'll go ahead and keep that in mind. Now, this is one that's going to be not a counter trend. This is going to be in fact with the trend. If I were to take this one, I'm just going ahead and mark this one out here, and this is my 90% level. That's where I would take it. And let's go here. I would have gotten stopped just below here, so minus 50 pips on that one if I was to take it with the trend. This month is cooked. Again, if it comes back up here, we're not taking it. If it comes back here, we're not taking it. It's just the first time it goes to those levels. All right. This one here is with the trend. You can see here I never reached my M3 counter trend because this pivot is higher than this pivot, so this would be a counter trend trade. This one would be with the trend. It never reached it. Let's see here. So I actually took a loss here. So this is going to be a loss. Let me go ahead and take my 90% level here. Alright, so I got in right here, and we took a loss. This is going to be for 77 pip loss. 77 pip loss. Okay, that's if I would have had my stop right down here. Alright, got April here. This is a counter trend trade. Like I said, I noticed these counter trends work out really well. It's a change of direction at the new month. So this right here, we're going to go ahead and take the Fibonacci. We're going to go ahead and mark it out. All right, we're going to take it at the 90% level. We're going to have our stop way below here, and let's see here. So I noticed that we do have, because it's an inside week, we're taking our profit either at R3, or we're going to be looking at a monthly target, which it only reached the R3. It did not reach the monthly target. It would have stopped us out either at break even or just below our swing low. So we're going to go ahead and take a look at all those options and then figure out what is the optimal way of trading this. So if we got in here and we got out at a weekly target, this would have been good for 115 pips. If we would have held it for a different target, we would have gotten stopped out either at break even or at 25 pips. Okay, so also the first time it comes up to 90%. Now I may have to change these fib levels. I'm not sure yet if this is going to be exact, but okay, so this did not hit my 90%. Maybe I have to adjust it to include, something close to it. But this did not hit my 90%. If it did, let's give another option here, just so that way I have a couple of options to choose from. Let's say an 80%. Let's go ahead and add. Let's go with 80%, which is a 0.2. This is going to be 80%. I'll have to go back and do all those stats as well. Let's see which ones work out the best. All right, so there we go. So we got an 80% in there. So this one hit the 80% level, did not hit the 90% level. And let's see here. We did pull below central pivot. I will jam my stop. We're looking for targets. We do have one target that's a possibility. We have a second target that's a possibility. And I'm still looking for a monthly target. A monthly target. And looks like I remember that comes all the way up. So it looks like if it was a monthly target, we would have gotten stopped out at break even on the monthly target. So if I was to take it at 80%, the stop out would have been eventually right above the swing point. Would have been stopped out for 6 pips. If I would have held it in for the weekly conservative target, this would have been good for 132 pips. The aggressive target would have been good for 152 pips. So these are all things that we'll go through the stats and figure out what the best option is. All right. The beginning of the month, we have a counter trend trade right here. So you would have had your pending order. Now we're going to go through all the stats and find out what's the best entry. Is it going to be the 80 or the 90% level? This one did just reach the 90% level. Let's go ahead and double up our stats here. Let's point them out first of all with with taking out the 90%, or and then we'll figure out the difference in pips between the 80 and 90%. Okay, so I'm looking for targets right now. It looks like we only got one of them. So if we were to take it at the 90% level with the pending order there, we would have gone possibly our conservative target, which is 106 pips, or break even, or a stop out just above, which is a -7 pips. Okay, and the difference between these two is going to be 5 pips. Okay, so it's a 5 pip difference. So this is the counter trend setup. This is with the trend. So if I would have gone in at the 90%, price goes above central pivot, eventually stopped me out at the swing low. That would have been stop out of 35 pips, and there is a difference of 5.5 pips between the 80 and 90%. All right, next month. All right, so this is the counter trend here, and we actually did not get it, and that's such a shame too that we did not get it. It's set up just before the month, and it pulled away. So this is my with the trend, and it looks like we got stopped out, so let's go ahead and mark that here. This is the with the trend trade, and if I were to take it at the 90% and got stopped out right above here, this would have been a stop out for 45 pips, and there's a difference in between the 80 and 90% of 4 pips. So this one's still valid because we haven't reached it yet, and looks like we just never get there. Okay, next month. Next month, we just didn't get it. We're just short, a few hours short of hitting our entry. Okay, so we do get a with the trend setup right here. Let's go ahead and pull this up. So this is going to be with the trend. All right, and we have entry here at the 90% level. We got it. We got it here. Did not breach central pivot. If we took it at the 80% level, we did hit the central pivot, and we would have jammed our stop. That's the interesting part. Now this is something we're going to have to really take a look at, because once it makes a go at it, and if it doesn't trigger and it goes to central pivot, should I not take it the second time that we come down? That's a question. If we do take it from here and we take a full stop, it's going to be worth about 58 pips on a full stop. Okay, so let's move on. Okay, this is a counter trend move here. Let's go ahead and take a look. And where's our stop? Our stop's pretty far away, but well, our fib level here, and looks like we have our 90% triggered. All right, so we're going to take our 90% or 80%, whichever one, but looks like it would have happened right in the beginning here. We probably would have gotten actually a better price as soon as it opened. We probably would have been in right here. If I was to take a weekly conservative target, it would be good for 128 pips. If it's a conservative weekly target, it would be good for 160 pips. If I was to hold on to the trade, let's see, my stop would have been back here. My entry probably would have been about here. If I would have held on to it, I would have gotten stopped out, and the stop, if I didn't move to break even, would have been minus 56 pips. Okay, so now we do have a entry as it comes in here. So this is our, let's see, where's the other pivot? Is this counter trend or with the trend? This is with the trend. The other one was counter. This one is with. This one's with the trend. We take our fib. Okay. Oh, first thing I have to do also is I have to, so let's see here. Okay, yes. Okay, so if we take it at the 90%, we have our stop up here. We go down to central pivot. We move our stop to just above here. We have a conservative target for the weekly at 137. Let's see if we have anything else. We have a aggressive targets for a weekly at 201, and if we're still waiting for a monthly target to hit, it just never happened, huh? Okay, so maybe it just here, let's go ahead and mark this out. Still look for a monthly here. Alright, let's look for a monthly. Oh no. It just goes on and on without a monthly target. Okay. I don't have a monthly target. The longer it goes on, the more it charges me on financing fees. Alright, so the spread, the pip difference between 80% and 90% for my stats is 4 pips. 4 pip difference. Okay, so we had this go. We had a go right here. Let's go ahead and move on to the next. All right, so if we're buying, this is falling, this is a counter trend move. All right, so we would get in at either the 80 or 90% level. Once we pull above central pivot, we're going to jam our stop, which we end up getting stopped out. So let's go ahead and see what that's worth. All right, so we are down 64 pips, and the difference between the 80 and 90% is 9 pips. All right, so we had a go at the M2 and it did not reach. I don't believe it hit the 80%. Let's go ahead and take a look. And you probably most likely just did not get it. Just did not get it. Is this all correct? I mean, you just missed it. Man, if you have the, I mean, if you would just squeeze the juice out of this one, if you would have had it at the 80% level and bring it just below that line, I mean, this is really pushing it here. Let's just say if you were to have it here at the 90%, no trade, 80% if you were lucky enough that it hit your limit order, you would have been in for conservative weekly for 150 or 171. Okay, we'll take that in consideration. Okay, so we have a new week or new month. Okay, here we go. This is a counter trend trade for the new month. We'll go ahead and mark this out here. We're gonna have to be more careful where we place our pivot points. So maybe we'll place it right in the beginning here. Okay, so it opens, let's see, it opens right in here, which is right at the 90% level. And let's see what we get out of it. If we were to get it right at the open at the 90, just about the 90% level, we would have had a conservative target of 151 pips. There's a monthly target and also a aggressive target that's within the monthly target. That would have been good for 236 pips. Now on the flip side here, this is let's go ahead and mark this out here. Okay, so this would be trading with the trend trade. You would have definitely been in at the 80%. You would have just caught the 90%. Once we dip below central pivot, you're going to jam your stop. So let's go ahead and see what that's worth. So if you cut it at the 80% and you jam your stop, minus 7 pips, the difference between the two is 4 pips. So there's a 4 pip difference between the 80 and 90%. All right, so that cooks that month. That month is cooked. All right, going to the next month. All right, this here is going to be a counter trend trade. Okay, whoops, what did I do? Okay, that's correct. We come in, we open up, and I probably catch it right in here as soon as it hits the 90 or the 80. But either way, even if I was looking for the 80, it still opened up right in here. So let's take the numbers for the 90%, which is, I probably got it, yep, right at the 90. Conservative target for a weekly would have been good for 86. Aggressive target for a weekly would have been 118 pips on that one. First time we come down to a with the trend. It was a with the trend. Let's see what we get out of this one here. It looks to me like it's going to be a stop. Okay, so let's take it right down here. If we were to take it at the 90% level, we go above central pivot, back down, and a wick that stops me out right there. So this would be a negative 36 pips. The difference between the 80 and 90% is about 5 pips. Okay. So on this one here, we came down and just hit our 90% level. Now on this here, what are we looking for? Okay, so we got our stop in place. R3, if we're taking this here, it would be good for 82 pips, or if we're looking for something a little bit larger as a target, we're going to be going for 138 pips, or the aggressive was going to be at 166, or if you're going all the way to the monthly, it's going to be at 186 pips. Counter trend trade. Is that counter trend? This is with the trend up here. So if we were to take a with the trend trade, okay, then we were to enter at the 90%, stop up here, go to the pivot point, just jam the stop. Just got stopped out. Got stopped out right here for 26 pips, and it's a 4 pip difference between the 80 and 90%. Let's move on to the next month. It was January. All right, here we go. So we have is this counter trend? Is it moving up and we're selling? Yes, this is counter trend. Again, like I said, counter trend. So I thought we're going to work out really well, which they seem to be already. All right, so yeah, as it opens up and I see that it's let's see, the first hour, it probably got it right in here, so it's at the 90%. Yes. Let's see here, so I would have jammed my stop once we reached below central pivot, and so I'm at the 90%. Conservative target for a week is for 129 pips. If I was to continue for an aggressive weekly target, it would have been good for 185 pips. And eventually it almost hit a monthly target, and it did hit a monthly target. Just to see how this one plays out, we'll take it all the way down to a conservative monthly, which is I can't even see this here, 287 pips. If we were to take the aggressive monthly target, I don't even have it on my chart anymore. Okay, it would be good for, and this is the first time we're hitting an aggressive monthly target, I believe. It would be good for 345 pips. Okay, and there's going to be a difference between the 80 and 90% here. of about 8 pip difference. Okay. So this one is going to be with the trend here. Let's see, we entered, moved above central pivot. So this is with the trend here. And we're going to jam our stop. Alright, so if we take it here, jam our stop. So this is going to be a negative 29 pips. There's a difference of 5 pips between the 80 and 90%. Okay, moving on to the next month. Is we come up here for our with the trend trade. So let's go ahead and pull that up here. So we're going to go, okay, if we had taken it at the 90%, we're going to jam our stop right up here once we break below central pivot. And oh boy, looking for targets. Looking for targets. Okay, so looks like we found a couple of valid targets right here. Alright, so all the way down here, a conservative target is good for 232, aggressive 252. And the difference between the two, 80-90%, is going to be about 5 pips. Set up right here. Just go ahead and mark that out. Alright, so this is going to be with the trend. Alright, so if I took it at the 90%, took a conservative target, it would have been good for 194. And if I was waiting for my aggressive target, I would have gotten stopped out either at break even or minus 33. And there's a difference of 9 pips between 80 and 90% entry levels. Alright, so first time here, and I can tell you right now that this is going to be a stop out, and it is a counter trend. Alright, so this is my counter trend setup. Alright, and I did not reach central pivot, so I take a full stop on it. Full stop. It's going to be a minus 77 pips on the full stop. Okay, moving on. Next month. Alright, so we come in for the next month here and blow right through. So let's go ahead and, you know what, I never took the distance between these guys here, so let's go ahead and do that now. Alright, it's going to be a 7 pip difference. Alright, so we do have a setup here. Alright, and once it opens up, yeah, I got my 90% just above it. Right here. Take a full stop, which is right up here. So it's going to, wow, it's going to be 136 pip stop on that one. 136 pip stop. I'm not going to do this, the difference because I know where my entry would have been. It would have been right up here as soon as the market opened. Let's go to next month. Okay. So we made a go. Came down central pivot. Stopped out just above. Okay. I don't think this other one is an 80%er. I'll be damned if it is. Look at that. An 80%er. That might be the way to go after all. Alright, so an 80%er. We have an inside week here. This is going to be a counter trend trade. Yes, counter trend trade. Alright, let's take a look here. Or no, sorry, it's going to be with the trend. So if you were to take the 90%, no go, never got it. If you were to take the 80%, don't forget to include the spread. So you would have been in here. You would have been looking for R3 on the inside week, and then your conservative target would have been good for 210, and then your aggressive target would have been good for 243 if you're looking for your monthly target. Conservative been good for 297, or aggressive monthly target would have been good for 383. If you were to take the counter trend trade, once we, let's see here, price comes down, did not hit central pivot, came very close to doing it. You probably took a full-blown stop on it, so let's go ahead and mark that out. If you were to take the 90% level, then we would have been out at minus 90 pips, and there's a difference of 70 pips between the two. And I'm thinking about, because we would have missed two good trades if we were only taking 90%. Such a small difference between 80 and 90%, that, you know, it might be it might end up playing out to where we do take the 80% trades. Okay, moving on. Next month. So this one here is going to end up being a counter trend trade, and let's see how it plays out. This is my fib level here. It's going to be a big one. All right. So if we were to take the 80% level, and price never comes down to central pivot, and more than likely, does it ever stop us out, because we still have our stop way up here. Once it comes below the central pivot, I'm allowed to move my stop down below here. And what do we have? Okay, we actually hit a target here, so this is going to be a long time coming. Let's go ahead and mark out my entry. Okay, we will mark my stop, where my stop eventually went. Okay, and then so price comes down. All right, and we did hit a couple of targets here. Now, whenever I have the monthly and the weeklies really close together, I like to take it right at the beginning of the monthly. Even if I have a conservative target, usually it acts like a magnet, so that's going to be where my target's going to be. You've seen me do it before in other trading system building sessions. So we take our entry. This is my entry zone, right? Take it here, go down to here. This is actually going to give us a positive 136 pips on that one. So go ahead and take these off. Okay, so we never got the trade set up on the other end. There is a difference between the 80 and 90% here. There's going to be a big difference. It's going to be 22%. All right, moving on to the next month. All right, so we do have, this is going to be a counter trend trade. Okay, so this is a counter trend trade. And let's go ahead and mark this out here. Boom. Let's bring this on up to here. All right, so taking at the 90% level, my stop's going to be way above. It's going to, once we move below central pivot, we're going to jam our stop just above here. I'm going to take it from the 90%, take it down to here, is where I normally take my profit if they're both combined. Is good for 256 pips. There's a difference between the 80 and 90% of 9 pips, 9 pip difference. Okay, so the first time that we come down to the M2, we have an entry, move our stop to break even, we get stopped out. So let's go ahead and pull up our pivots here. Alright, so if I were to take it at the 90% level, it would have been a negative 37 pips. There's a difference of 6 pips between 80 and 90%. All right, next month. Did not get an entry. And I'm going to save the video. I'm going to watch it, and I'm going to determine which is the best place to place my stop, where and when to move my stop, and where to take profit, and if I'm going to be taking the 80% or the 90%, or if I'm going to be taking the 80% under certain situations and the 90% under other situations. Maybe if there's like a large, price distance between the central pivot and the M2 or the M3. So I'm going to go ahead and work all those numbers, and I will come back and share those with you. All right, and we are back after the backtesting of the monthly M2, M3, and we got our I don't know if you're excited about this one. I really am. I love doing stats. It allows me to be confident in my trades, especially as a new trader. I don't have to be worried about emotions. I have proof behind me. So I love doing this stuff. This is what makes me excited. So here are the results. So I wanted to know where to place my stop, and in fact I'm going to be placing it the same place I always place my stops, and it seems to be above the the resistance one or support one, so above or below the resistance or support. I'm going to move my stop whenever price moves beyond the monthly central pivot point. And same thing that I've been doing. I'm just going to move my stop below or above the swing point. And where to take my profit. So this is going to be the conservative weekly take profit zone. It's going to be the M1 or the M4. And I'm going to enter in at the 80% level. I like that level. I also noticed that, if we do come up to test my stop around the R1, S1, if it comes up or comes down to that level, if it goes up there, it usually continues right on through. So I don't have to have such a wide stop above or below R1 or S1. That's to kind of offset the 80%. So maybe about, oftentimes is about 5 pip difference between the 80 and 90%. So I'm going to go ahead and cinch up my stop by about 5 pips. Not a big deal. And I'm sure you want to see the actual stats results themselves. All right, so in 2 years of data, we have 38 trade setups for the Euro USD. That netted us 20 wins, 18 losses. The wins come in at 52.63%, losses 47.37. I'm not too concerned about win-to-loss ratio. It's all about the end results. This is what's important here. It's a 2.5 to 1 risk-to-reward ratio. Total wins, net 2,992, while we have a combined 980 pips and losses. Altogether, we came out with 2,012 total pips. Every time we took a trade, win or lose, it averaged out to be 52.95 pips per trade. It's a nice little easy one to add to the weaponry. We'll see you next time.